Hey everybody, I hope everyone's doing well and had a good day. This video is going to be a brief recap of the Emini 5-minute chart for Wednesday, December 11th, 2024. On the bottom left of my screen here, I have the daily chart, and if we look at the context, up to yesterday we have consecutive bear bars, but look to the left. We have this rally consisting of 4 consecutive bull bars. The rally is bigger than the sell-off, and we're still above the moving average. So consecutive bear bars, yes, that's good for the bears. But we have a bull trend line that just got broken, and we're testing breakout points over here. We may need a retest of the bull trend's extremes before we get any major reversal. The bears couldn't even get to the moving average. So to me, this looks like big up, big down, big confusion. And I think most likely at this point, or by 2 days ago, Monday, the market was in a trading range. And because it's big up, big down, I want to share a slide that I made. And I call it BUBD, but it's literally just what Al calls big up, big down. It's big confusion, just the acronym. And I believe this was Monday. No, this was yesterday. So I have some big up, big down bars highlighted here. And the whole point is if you have big up, big down, big confusion, you know the market is in a trading range. And at that instant, you have to shift your mindset to buy low, sell high, scalp. So for example, right here, this bear bar was the first bar of yesterday. So we gapped up going into the day. This is the SPY chart. That's why you don't see the last 3 bars on the E-mini. This is bar 78. But we gapped up, bull bar and gap up, and then a big bear bar. So big up, big down. So immediately, you know the market is in a trading range. We had the same thing happen here. Big up, big down. And so what do I have up here? If BUBD, FBO, CDL. FBO just stands for fade breakouts. And what I mean by that, actually let me explain CDL too. CDL to me means capture delayed second legs. So for example, in here, after big up, big down, I'm looking to fade breakouts. So if there's a bear breakout, I'm going to bet that it's going to fail. Bull breakout, bet that it's going to fail, or at least have a deep pullback. So if I'm looking to buy after this 3-bar bull micro channel, I don't want to buy the close of this bar. I don't want to buy up here high in the range. I want to buy a deeper pullback. Maybe that's the breakout point from, if this is bar 1, here's bar 2, the high of bar 2, that breakout point. To me, it looks like we tested the midpoint of the tail on bar 3. So from the low of the bar to the open, the midpoint looks like that's where we tested. That was also support. But the point is, FBO, fade breakouts, and that's how I'm entering on deep pullbacks to capture delayed second legs. So we have a rally, probably we'll get a second leg, but since it's big up, big down, I'm looking to buy a deep pullback. So I'm going to fade the bear breakout and then look to capture the delayed second leg up. Leg 1, deep pullback, leg 2. So even though we had consecutive bear bars, the context was not really great for the bears. And then for the 5-minute chart, so we gapped up going into the day, significant gap up. We just look at yesterday, we actually gapped up and bar 1 broke out above the high of yesterday. Here is the high yesterday, bar 1. We broke out above the high, and then bar 2, trying to reverse the breakout, But bar 2 is a lot smaller than bar 1, and the sell below bar 2 did not trigger. So the bulls prevented the stop order sell from triggering below bar 2, and then we rallied on 3. So we have a bull breakout and a breakout pullback, and then trend resumption up on 3. And then, of course, we got the breakout 4, 5, 6. Strong enough up, probably we'll get a second leg. We pulled back below 6 on bar 7. 6 is a weak stop order sell, and 7 was a weak entry bar. So we pulled back, but a second leg up was likely. This entire rally was strong, and that's exactly what we got. We got a pullback and then a second leg up. So this is a spike and climax trend. You can also count 3 pushes up, bar 1, bar 4, and bar 9. So a little bit of a parabolic wedge, 3 pushes up, but tight enough bull channel that we can infer it's a breakout on a higher time frame. And so any reversal will likely be minor. Parabolic wedges are minor. So the wedge is more clear on a smaller time frame chart, but look at the selling pressure through here. Bear bar, but no trigger, and relatively small bar, and then bar 7, a weak bear bar. We did get some selling after the third push up, which is to be expected. You expect 10 bars and 2 legs sideways to down after 3 pushes, and that's exactly what we got here. You can see we got just about 10 bars, and it was 2 legs, 1 pullback, 2, and the second leg even subdivided into 2 legs, 1 pullback, 2. The first technical pullback was below bar 6, so we have traders trapped down here, and both bulls and bears are hoping we get back to this line. Traders would like to buy here at support, and we tried to get there on bar 12, but when we rallied for another 4 bars, that was disappointing for the bears. And the way I see 13 through 16, I see it as a pullback of a pullback. So I don't see this as the bulls attempting to resume the trend as much as I see it as a pullback of the pullback. And by that, I mean the most major move of the day, the most significant move, was the rally up to bar 9. This was a pullback down to 12, and this was a pullback of this pullback. So not necessarily trend resumption attempt, but leg 1, pullback, leg 2. And look at the rally from 13 to 16. Bull bar 13, it's a spike, and then the next few bars we channeled. This is a spike and channel trend on a smaller time frame, and we're testing a breakout point. And we can't exactly see the breakout point on this chart. It's somewhere within bars 9 and 10. But we can infer there's a breakout on bar 10, somewhere up here in the upper third of the bar. And bar 10 trapped traders. It trapped traders buying the close of 9 or anywhere in here, or traders who didn't sell. They missed the sell-off. And you can see bar 10, this was also a spiking channel, 10, 11, 12, spike, pullback channel for 2 or 3 legs down. So bar 11 would be the top of the channel, the start of the channel, which often becomes the top of a trading range. So spike, channel, we tested to the top, failed to break out above, and then we're in a trading range. But the bulls had the advantage. We're far above the moving average. We had this pretty strong rally on the open with a reversal attempt that wasn't very strong, not a very significant trendline break here. And, for a major reversal, where are the consecutive big, strong bear bars? Through here. They don't exist. So this entire pullback is probably a trading range and a bull flag, which means it's more likely we'll get trend resumption up than trend reversal down. You can view it as a triangle like that. But either way, it's probably minor. The bears are getting a couple of legs more sideways than down. And the bears cannot get consecutive decent bars. So after 2 attempts down, 1, 2, we're getting trend reversal back up. So bar 18 I think bar 18 is a dangerous bar to hold short above, even though it's not all that strong, and bar 17 will probably get a second leg down because of the overall context. I would say the same with 13, although after these three bars, 13 will probably be minor, but it can be dangerous to hold short above 13. And then we started to get trend resumption here. We had a bull bar 20 breaking out above the prior couple of bars and then follow through 21. So a decent pair of bull bars after two reversal attempts, and we expect bars 1 through 9 to get a second leg up. And maybe go for a measured move up. And through here, the selling pressure is really weak. So the bears tried a couple of times, and they may step aside for several bars before they try to sell again. They may try to sell up here at the bar 9 high, but we can see what happened. We raced up and straight through that possible resistance level. 24 breakout, minimum follow through, 25. It's really not great follow through, but it's still trapping the bears who sold here. And then we had another give up bar, 26, follow through 27, strong enough breakout. We're probably going to get a second leg up, and the first reversal attempt will likely be minor. So in other words, the bears need some sort of double top. They need a trend line break and then a retest of the trend's extreme before there's any talk about a major reversal. So that's what we had here. Similar to down here, we had a weak trend line break, no consecutive strong bear bars, minor reversal likely, and look where bars 29 and 30 tested. 26 trapped traders. It's a trend bar above a doji, and we're testing that breakout point on these bars. So we're testing a breakout point. It's a micro double bottom, 30 closing on its high. It's a decent bar to buy for at least a scalp. But at new highs, it looks like we're entering the channel phase. We're pulling back. Traders are buying below bars, breakout points, and then selling at new highs. And that's what we're getting, profit taking up here. Probably more profit taking from the bulls than selling from the bears. But in any case, we got consecutive dojis, and then we pulled back almost all the way down to the moving average. But we're testing an area where traders just got trapped before. So similar to over here, this breakout trapped traders down here. It looks like we tested the low close of 29, and that became support. Whenever, let's think of it this way. Some bear sold the close of 29. It's not a great sell, but it is a bear bar. And if you took that trade, you obviously got trapped here, and you're hoping the market comes back down to your entry price. Whether you're scaled in or not, you're probably going to look to cover your short and look to buy at the 29 close if we get back here. So if the bears are looking to buy, if we know the bears are likely to buy at some price like the close of 29, it's likely to be support. So if we know the bears are buying and the bulls are always buying, we're probably going to find support. So we race down a little bit there, but then that follow through, no breakout below it, bull bar closing on its high. I think bears will exit above a bar like this, especially in this environment. It's more bullish, and traders can buy for at least a scalp. We're probably going to test the high of 33. Good entry bar, probably will get a second leg up. We have it on 43, but we are in the channel phase at a new high, so we may see more profit taking here. And you can see the trend getting weaker and weaker. Then we finally broke below the moving average. On bars 53, 54, we have a gap bar. 54 is completely below the moving average for the first time in over 20 bars. We often get a retest of the trend's extreme, but at this point the trend is getting so weak it looks more like a trading range. We're still above a major higher low, 37, so traders will still call it a bull trend, but it certainly is weaker now than it was here and here. So what will happen on a retest? Well, we might find sellers at the new high, because now we're getting consecutive bear bars. the bears move the price a pretty decent distance. And again, it looks like more like a trading range here. So traders may look to buy low, but then when we get back up here, they'll look to sell high. So if we know bulls who bought up here are disappointed with the sell-off, then bulls probably selling up here. If the bulls are selling and the bears are always selling, we'll probably find resistance somewhere up here. Trying to get trend resumption, the bulls are, but lots of dojis and overlapping bars. It's a pretty weak rally for the bulls. It's enough that we'll probably get some sort of second leg up, but it also looks like a 50% pullback of this sell-off. And again, the rally was not very strong. And that damages the bull case. We're trying to get above 50%, but failing. But enough bull bars, we'll probably get some sort of second leg. But 64, disappointing. Deep pullback. Now the bulls are trapped here, hoping to get out maybe somewhere around the close of 62. And again, if bulls are looking to sell and the bears are always selling, we'll probably find resistance here. You can see the market tried hard 2 or 3 times to get back here, but it's failing. And now we're in a tight trading range. We've been sideways for maybe 40 bars. And after the market's gone sideways for 20 or more bars, breakout direction generally becomes more like 50-50. And because we're getting late in the day and we had a bull trend day, it's a bull trend from the open, you often see profit taking in the final hour of the day. You have traders who bought all the way up. We're getting late in the day. We're going sideways, tight trading range. Traders will start to take profits. So we actually may get a profit taking sell-off late in the day. And that's the danger of holding long below a bar like 73, bear bar closing on its low in a 50-50 market. And that's ultimately what we had here. We sold off. If we look to the left, where we sold off to, it looks like we sold off to a breakout point, maybe the 19 high. We didn't quite get there. But we did test the 22 high. That was a doji where we had 23, 24 breakout and follow through, trapping traders here. We vacuumed right down to that price. So again, we had a bull trend from the open today. You could also call it a bull trading range day. Here, it was more of a bull trend here, and then from here, we had more trading range price action. And you may say it started on maybe bar 27. So we had a lot of trading range price action through here, trading range here. So if you look, a lot of the day, the majority of the day was spent going more sideways. But if we think about the day on the daily chart, again, if you look over here to the left, the bulls had a rally, but ultimately we closed almost around the midpoint of the day. If we look, here's the high, here's the low. The bears actually managed to push the price all the way back down to about the midpoint. And that puts a big tail on top of this bar on the daily chart. And that's disappointing for the bulls. It's already disappointing for the bulls. They're going against 2 big bear bars on the daily chart. And now we have a gap up and a bull bar, but big tail above. So we have traders selling into the close of the bar. We're testing high in the trading range at a price where bulls got trapped. And once again, wherever bulls got trapped and they're looking to sell, we expect resistance because we will then have bulls selling and we'll have bears selling because bears are always selling for any reason. So we look at the high close up here, and that's just about where we tested. We went a little bit above it, but ultimately sold off from there. So where do we go tomorrow? Again, it looks like big up, big down, big up, big confusion. To me, it looks like a trading range. If we do get above today's high, I suspect we'll find sellers above. It's a bad stop order signal bar, big tail above the bar, and it's bad context. We're high in a trading range. But also if we get below today's low, I suspect there are buyers below because of the strength of the rally, and it looks like we're just about in the middle of the trading range. So entering on a stop order below this bar, the daily chart bar, betting on a successful breakout in the middle of a trading range, usually not a good bet. I think tomorrow will be mostly sideways. Please feel free to leave questions in the comments, and please include timestamps for any question specific to this video, and I'll try to get back to everybody to the best of my ability, the best that I can, in a timely manner. And as always, I really appreciate everybody for watching. Alright, I hope everyone has a good night. Thanks for watching.